What is technical analysis? And this is just some of the background information that I believe are what I call tools, and this is your foundation when it looks at technical analysis. So when we talk about this, we talk about you first need to establish what kind of market are we in. Are we in a trending market or are we in a trading market? Those are the two kinds of markets we get. Trending, either the market's trending up or the market's trending down. Those are the markets you want to trade. When the market's moving sideways, that's what we call a trading or a range-bound market. And I prefer not to trade those kind of markets because we'll talk about it again just now. That's where a market is going through a consolidation phase, a little bit of wait-and-see attitude. Okay. So those are the first things you need to ask yourself. What kind of market are we in a trending market or a trading market? And also what's important to establish what cycle are we in. There's 3 cycles. You get what they call a primary cycle, and you've heard of the phrase before, a bull cycle or a bear cycle. Okay, that's your in a bull market, we talk about a primary bull. That's your long-term cycle, lasts from a few months to a few years. Okay. And a bear market, obviously, also from a few months to a few years. But it takes longer to build, okay, and it takes a shorter period to break down. So we need a bear market to bring prices back to more realistic levels, okay, especially in an environment now where our market is fairly priced. Some shares are fully priced. We need a pullback, a bit of a bear market to bring prices back to more realistic levels. So that's the first cycle, your primary bull, primary bear. Within a primary bull, we have what they call a secondary market, and that's what we call corrections. So in that long-term upcycle, so there's little pullbacks in that long-term upcycle. That's what we call corrections. So when you read in the newspaper, the market's corrected, you know the long-term trend is up, but short-term, the market's pulling back. Okay, that can also be a lot of profit-taking, etc. In a bear market, you also get a secondary trend, and that's called a rally. Those little up movements within a long-term downtrend. Those are called rallies. So again, when you read in the newspaper or you hear on TV, the market has rallied. Now the long-term trend is down, or the primary trend is down, secondary trend, the market is rallied short term. That lasts from a few weeks to a few months, so the cycle is much shorter. And the third cycle you get is what they call daily fluctuations or the minor trend. Today's close compared to yesterday, or today's close compared to last week Monday. Okay, a lot of novice traders fall into a trap of looking at today's close and comparing to last week or to Friday, for example. Okay. Your main goal, even as a short-term day trader, is still to establish, are we in a bull market or bear market? What is the primary trend? And then from there, you chunk down to what they call the corrections or rallies. And that gives you a much better perspective which way the market's going. Because most people are always on the wrong side of the market when they're trading. Okay. So we're going to a bull market. The definition of a bull market, higher highs, higher lows. In a bear market, lower lows and lower highs. Okay. So you must understand that the demand is exceeding supply in the bull market. In the bear market, there's more sellers than buyers, or supply is overcoming demand. In a sideways market, that's where we talk about the market being range-bound. It moves between two very narrow levels. This is where the buyers and sellers are having a bit of a tug-of-war, the bulls and bears. We're waiting for new information. And either the information is positive or bullish, the market's going to go up. If it's bearish, we break out of that trend and we can break downwards. Okay. So let's think of a sideways market as a bit of a tug of war going on. And that's what we call a consolidation phase. So when you read in the newspaper, the market's consolidating, the market's taking a breather. So the market's taking a breather, and from there we're either going to move up or move down. And that's when we talk about breakout strategies and breakout trading. When you use chart patterns, we'll talk about it a bit later. Okay, that's where it's effective as an entry and exit level using a sideways market. Okay, so those are the two things you need to understand first. From there, we move on to what they call support and resistance. Now, I'm going to teach you some terminology. We don't talk about peaks and troughs. We talk about support and resistance. As I mentioned just now, every single point on this graph is a buyer and a seller. When the price moves up to a certain level, we hit a ceiling. So that you can call it your resistance. Okay, there's more sellers at that level. So obviously, there's more sellers than buyers, and the price will drop. Then you get to a certain level where there's more buyers come in, and we stop the bleeding as such. And that's where we meet a floor or more buyers. The minute we go up and we move up above the previous resistance level, that's confirmation that the trade is still up. And so it goes on. We hit another area of resistance. Let me just bring my little cursor here quickly. We meet another area of resistance. It pulls back. And the minute we go above it again, that's where we have confirmation. But what's important to understand is in an upward trend, when the market pulls back, you can also use the previous highs or the resistance levels as a possible support level. And I call that turning points, possible turning points. So I can anticipate where will the market pull back. And it depends also on the maturity of the trend. Sometimes it pulls back a third, sometimes 50%, and sometimes pulls back 60%, okay, or 66%. Those are the three different levels. The average is about 50% retracement of the previous up movement. But the point I'm trying to make is that you can anticipate where will the market pull back and where will the market turn. Okay, so that's in the bull market. In the bear market, when the market's falling, a previous support will be a resistance level. Okay, so how far will the market rally? I can look at the previous support level. It doesn't have to work all the time, but it gives you a good indication how far will the market rally.